Welcome to TMS Insights. This is an international edition following the third quarter earnings in the US. As we did 3 months ago, giving you an update of the major companies, some of the ones that we like in the US market, and a number of the stocks that we both hold and recommend our clients buy. There's some really exciting things going on in the US market. Ben and I were obviously in the US earlier in the year and walked away having done some real analysis of some of the valuations of companies there and saying we've got some ridiculously exciting prospects here of major US companies trading on multiples that are actually cheaper than some big names in the Australian market. And so that's the purpose of updating you today about the third quarter earnings. Ben, it was a good season, in an environment where we're cycling back to last year and some numbers weren't as high, but overall there's very good revenue growth, number one, which I think probably surprised, even if the profit line was different in each case.
Yeah, there's quite a lot of businesses that are pumping a lot of that revenue back into themselves. So, it's this US mentality of foregoing some short-term profit for a longer-term goal. And you're right, we're cycling the period now where the Trump tax changes kicked in, and that gave off a one-off sugar hit to a lot of businesses, which they're now going against, and the real sort of things coming through. But I think by and large it was a pretty solid kind of earnings season. Yeah,
and just before we get into some of the individual names, to talk about this valuation issue. So the key thing we look at, and people will be very aware of price-earnings ratios. There's something we think is even better is the economic value versus EBITDA multiple, which gives a little glance to the balance sheet. So it says if you've got net cash or debt, we should account for that and understand the strength of the company. We're actually getting companies that we're about to talk about on multiples of around 13 times, Ben. 14 times, which compares very favourably to big retailers like Woolies and Wesfarmers in Australia.
Trading on very similar multiples with much lower levels of growth and much smaller markets that they're operating in. So, I think, the three that we sort of mentioned we started to look at a quarter ago, and I would also add that we are starting to try and look at some more companies on top of these three that we've had a look at through this period. Facebook was an interesting one.
Wow.
Given it's the cheapest. So Facebook's trading on a PE next year's earnings of 21 times. And it grew its users by 8% in the last quarter. Now, just to put that into some sort of clarity, Facebook now has 2.8 billion people who look at one of the three services, WhatsApp, Instagram or Facebook, once a month. 1.63 billion look at every day. So the user growth, despite, this company's had some real regulatory issues, has continued to grow. But if you look at the sales line, 29% revenue growth for the business for the quarter, for a business that is trading on 21 times profit, it is fairly extraordinary.
And the number that's important is that one that you said at the per month usage, because that's the one analysts try to work out how much revenue or valuation per user. And it's less than $200 based on the valuation of Facebook at the moment per user. So surely they know a lot more value about an individual user than $192 a head.
Absolutely. And that's where the long-term value in this business will be, is they know what 2.8 billion people like to look at, the content that they're interested in, the demographics. And so that's just one of the most powerful sales tools that you can go to an advertiser with and say, we can specifically target the people that you're interested in to sell your product.
And it is interesting, the product, because it's important to establish WhatsApp, Instagram, more than the name, and Facebook, that's the stock name, and it's obviously a main product, but it's the growth in the other two which is phenomenal.
Absolutely. The growth in the conglomerate will come principally through WhatsApp, probably, which they haven't even started to try and make into a profitable business at this stage. They're still trying to just grow it. Instagram is just extraordinary. I mean, they paid $1 billion for this in 2012, and they're actually still not splitting a lot of this out. But if you look at the growth that is, because Instagram is a platform where people interact with brands as opposed to with their friends and with their family. So it's a much more effective
B2C, effectively. The interesting one, Google, which is renamed to Alphabet at the parent company level, because it does so many different products other than what we know. And you will search it under GOOG, G-O-O-G. It, again, produced some really good numbers, Ben. We love some of the optionality in a number of these businesses.
And the balance sheet, can I just add?
Yeah.
Google has got 132 billion US dollars in cash on its balance sheet, and actually trades on an EV to EBITDA of 11.6 times, principally because it's got so much cash.
Just cheap, yeah.
Now, Wesfarmers trades on 14 times at the moment. Now, Google grew its revenue at 20%, so that was a small beat. But the real highlight that is coming through this business is the cloud business that they've launched. The cloud business didn't exist 2.5 years ago. In the last quarter, it generated $2 billion US in revenue. So it's just going like a hockey stick. And we all know the story about the cloud, which is just phenomenal.
Cloud's been all the rage. I mean, we're going to talk about Microsoft in a second. Amazon, I mean, it's a big part of their business.
Yep.
Maybe in their numbers, it didn't grow as much in this quarter, Amazon Web Services.
That's right.
But they had some really interesting numbers, Amazon, because of the massive growth in revenue, but also costs as they transition from the 2-day to the 1-day delivery on Amazon Prime.
Correct. Yeah, I mean, the two key parts are the Amazon Marketplace and AWS, which is the cloud storage business. Now, AWS, I think, grew at 35% its revenue for the quarter, but that was actually the slowest pace of revenue growth
of the three.
And its slowest pace as a business. So the growth is phenomenal, but slowing a little bit.
Yeah.
Amazon Marketplace, Bezos is rolling out 1-day shipping across the US, and in the last quarter alone, they spent an additional $1.5 billion US on shipping. Now, they actually spent $9 billion for the quarter in shipping, US. So again, Bezos spoke about, we saw a massive pickup in demand for products through the website as we rolled out 1-day shipping. So the revenue...
And that's free 1-day shipping, so it's not recovered immediately. That's the big point. It'll be recovered down the track.
Yep, and so that saw revenue beat expectations. Profit came in under expectations because of those shipping costs. I'll just give another statistic on the scale of these businesses. Amazon added 165,000 employees in the last year. They're now hiring 750,000 people. And most of those employees were actually for the AWS division. So, they're taking on a lot of costs because they can see where the next 20 years looks like, and that will come in a short-term hit. But still, versus a lot of businesses in Australia, this company doesn't look overly expensive.
And they learn a lot about their customers through that AWS side of things, don't they? They're really quite a powerful knowledge source. Their share price reacted badly initially to their result, down 7%, pretty much bounced back 2 days later, so it's all good. Let's go to Microsoft, Ben. The Azure business has been very much in focus, getting some real wins in the cloud business. Yeah,
I mean, so this is one we started to have a look at along with some others. And the big news that came out was actually in the last week where Microsoft, their cloud offering, which was seen as an inferior offering to AWS and is still a clear number 2 in America to Amazon, they won a contract called the JEDI contract, which is basically storing all of the data for the Pentagon in America. It's a $10 billion US contract that they've won, but it's actually more than the numbers, although this will earn them a lot of money. What this is going to do is the industry that is built around the Pentagon, all the defense contractors, the other nations, the allies, will likely, it's from what we read, have to go onto the same platform. So this could see huge sales pipeline emerge for Microsoft. But the other message it sends is that the US military has been very wary of the cloud and storing data in the cloud and using private companies to store data in the cloud. So this was a major decision by the US to do this.
Quite a political one too.
Huge. Bezos is absolutely furious about it, and he's suing the US government because he believes Donald Trump has it in for him, who signed off on the contract. But what it does point to is that the US military is comfortable with the security, I guess, of Azure's network, which will, again, probably lead to more take-up of it. So it's pretty fascinating when you read about it all.
It is amazing. Just lastly, on the streaming businesses, we're obviously very aware of Netflix and what a great, sensational story that's been. But let's just talk about Disney for a moment, because Disney's finally launched Disney Plus, which is their streaming service. Ben, 10 million subscribers signed on the first day.
It's
First day.
yeah,
Incredible optionality in these businesses to get an understanding. They will launch in Australia pretty soon. But in case people forget, they're Disney, Pixar, and Marvel,
ESPN.
and ESPN, and they've got these new launches of Star Wars. So they've got the ability to cut through the cinemas and get straight streaming to the subscriber.
Right.
Incredibly powerful.
And this is Disney's strength, is they own the content. And the content is far more valuable and powerful than the vehicle that content's been delivered through. Yeah. So this was a pretty obvious thing. They've been pulling content off Netflix over the last few years, off Stan in Australia, going their own streaming service, which creates this incredible recurring revenues and ways to launch your own shows. We've got The Irishman's launching on Netflix shortly, which is
Scorsese's masterpiece.
Yeah. So,
can't wait.
So anyway, it's another one that doesn't look overly expensive, and the numbers are just extraordinary that have on the launch.
Yeah, fabulous. All right, well, that's the reporting season for the third quarter. We'll bring a fourth quarter reporting season update in February once that's come out. That's all for today.